Hey guys, you've joined us live at Money Control. I'm Manisha Gupta and we're looking at the crude oil prices because the last 24 hours have seen a very sharp, savage cut come in for the crude oil prices to the tune of 3 to 5% as well. Well, we did see prices gain up by 2% in the previous week, but with the current decline now, we are trading to nearly 6-month lows for the crude oil prices. So for 2024, we've turned into negative by time. This is because Saudi Arabia has cut the official price to Asia to the lowest in 27 months. The cut has been to the tune of $1.5 to $2 there. In the meanwhile, OPEC also has seen an output increase by 70,000 barrels per day in December. The US rig count is expected to continue, and there are higher outputs from African countries like Angola, Nigeria, even Iraq for that matter, and that has pulled the prices down. In addition to that, there is concerns about, while there are concerns about Israel and Hamas war and Red Sea concerns, Syria output, but all of this has not led to a decline in crude output yet, and the markets are staring at a high gas inventory, and distillate demand in US is the lowest since 1999. So the concern clearly coming in sense of demand and supply mismatch there. The street also is digesting the US non-farm payroll data, which was higher than the expectation, telling you that the rate cut for the first quarter in 2024 perhaps may not happen. The markets are now waiting for the EIA short-term outlook report for oil and gas that comes in today. The OPEC meeting is on 1st and Feb, but there is lots of other data also coming in for this week, including the US inflation, PPI, and the Fed official speeches. And then you also have inflation data coming in from India, Australia, and China. There is new yuan loans that the street is waiting for as well. And then there is China trade data. So there's lots of stuff coming in for this week, which will tell you on what way are the prices moving. Let's get a sense on what to make of all of these events. We have with us Ajay Kedia of Kedia Commodities. Ajay, hi, thank you so much for joining us. To start with, the kind of decline that we've seen in crude oil prices at these current levels, what's your sense? Are further lower lows in picture?
Very good afternoon, Michelle. Definitely, if we see prices yesterday went down almost 27-month low. We have tested WTI trading very near to $70, whereas Brent is closer to 75-76 zone. I think everything has been discounted. We have seen since October when the prices for Brent has tested 94. Despite geopolitical is on its peak, we have seen continuously fall in prices. No doubt, extreme statements from Goldman Sachs last week has came that prices could double if this conflict would continue to be there, but no sign of demand as of now picking up. In fact, OPEC production for December month is showing a 70,000 barrels that has improved despite Saudi continuously focus on production cut. Even from US side, we have seen supply production has improved around 13.3 million barrels. So I think supply side has been quite there, and as per the last data, that Q1 for 24 is going to be on a surplus side. All this contribute to this current fall. Maybe if we talk about the level, we have seen $70 mark for WTI is acted as a very strong support in past. In December month also we have tested 70 and then we have seen a bounce back. So I think technically market has been overdone with all these stories for supply side we have done. I think today, tonight, there will be a short-term outlook, would get some support in the prices on technical ground. But overall, I think events are quite big. We have to watch for new outcome. But as of now, we feel unless and until $80 mark doesn't break WTI, there is a high probability we can see a little bit bounce to the level of 72, 50, 73. Same kind of support around 75 for Brent is expected. Even on domestic market, since last couple of months, we have never seen prices holding below 5,800 level mark on M6. So I think 5,862 is probably a new range as of now. Unless and until some new event doesn't come, I think a bounce can be expected in next couple of days.
Okay. So, I mean, as you said, it's going to be at $8 to $10 of a range that the crude prices might be looking at. When it comes to trading within Indian markets as well, Ajay, we've seen options and futures both tend to do quite well. So, if there is a strategy that you would want to make for this week, looking at the data heavy week that this is going to be, what would that be?
Totally on future side, I think market has overdone its weakness. So I think 5,800 will be acting as a very strong support as of now. For future trader, I think one should try to take long position around 58.80 with a stop loss below 57.80, and could be a bounce for this week near to 61.50 on higher side. Whereas for option also, I think 5,900 call would be the preferred choice to buy. We can see a limited upside in 5900 call.
Ajay, talking slightly longer term right now, and the markets are looking at an interest rate cut now, not in the first quarter, but in the second quarter. How much of an impact would that have?
I think whatever we were expecting in the month of November, that should be a rate cut from the March onward, that has already been discounted. Now, if we talk about CME Fed tool, last week it was around 72.8, but now it has dropped down to 62.4. That clearly suggests that even in next, there is a low probability that we can see a rate cut in the March. That is why, despite dollar index is dropping below 102, we have seen fall in gold prices or crude prices. So I think rate cut in March has been already been market has digested. There won't be any rate cut in March. Maybe from April onwards we can see. That is why I think interest rate concerns what we have already seen for dollar has been discounted in the market. So I'm not expecting that could impact crude as of now.
We've seen a 10% decline in crude prices in 2023. We've started 24 on a weaker note as well. How would you look at the trajectory of crude going forward?
Looking to the last week statement from Goldman says definitely there is a choke point in Suez Canal, and we have seen this conflict. Yesterday, I think from US side also there was a statement that if this tension will continue, that will impact the regional territory more. So I think if this ongoing concerns would be there, definitely prices will get support. From the US side, they were expecting $70 to refill their SPR holding. So I think they have achieved that level. So I think we are bottom of the prices for 24. We don't expect prices to go or hold below $70 mark for WTI. So I think 68, 69 could be the supporting part for WTI, but higher side, it's totally open. Looking to the consumption demand also, because in last second half of 23, we have totally, China was been totally in van only. So I think in 24, if China start picking up, I think demand should improve, and supply side already we have seen concerns in there. So I think for first half of 24, we are expecting prices can create a base near to 68, 70 for WTI, but higher side we keep open for a level like 85, $86 can be achieved.
A final question then, and Ajay, when we start a new year, the second week of January is always about allocations and weightages within asset classes into commodities as well. How have you seen the kind of build-up that has come in from CFTC or the conversations with the global banks?
Definitely first month is going to be very important. If you look for ratio like GSCI versus S&P, still it is on a lower side, which suggests allocation in commodity should be there, because already the valuation side, equity valuations have been quite high on this side. So I think there is a slow and steady build up in precious metal. We have seen base metal up till now not given any signal, but for energy market, last week data suggests there was a not so much improvement in buying, but I think looking to the overall factor, I think energy could be the preferred pick as of now for crude oil, and then precious metal, and last would be the base metal.
All right, so that really seems to be the ranking. Ajay, as always, thank you so much for joining us. So January always has been very important in sense of allocations within the commodities, and as Ajay says, it is going to be energy, precious metals and metals in that category. And if you are taking a call on commodities for investing, that is the way perhaps to go.